Welcome to the Forex, and here we're looking at the US dollar index, and the sharp bounce through here is still part of a corrective pattern, which is an ending triangle pattern here that will be in three waves. So we're basically, as this here was in three waves here, we're looking for much the same here as well in three waves to this point and then down here as such. So that would leave the euro with one more high as well. But we have to be a little bit careful in what we do and say here. So in terms of trading anyway. So in terms of Elliott here, we were looking for basically a pattern like this, and then down to here, and then finishing and then moving up through here. But we need to be mindful that this can also be the low here as well, and we could move up from here. And the way that we will track that is that currently this move up here appears to be in three waves. But if it turns into five waves here, then we know we're going to get another five over here. So once again, support, tested support, we can expect a bit of a vibration across the 80 anyway, but a nice solid support on top of 80 would see us to the upside. So here, it's a little bit tricky to count this because of the sharp move within here, especially on the euro. But it does appear that it is in three waves so far, which can be an A and a B and a C, or it could be an unfinished five waves in terms of the one, the two, and then the third wave, the fourth wave, and the fifth wave coming further up here. So we just really need to allow that to unfold, and that's the same with the euro as well. It could possibly have a top in, but our primary count would be that that we've got a move down here first as wave 4, and then a move to the upside here. So once again, the move down here is a little bit tricky to count because it's the sharp move of it. But yes, we're looking for pretty much a move, something probably not that high, but something like this, and then up here. So what we really need to do is just sort of allow this to finish off through here. We know that the daily is becoming oversold, but that would still leave it oversold down at 137 there. So I've tried to pull this apart here and figure it sort of all out, but it's just because of the sharp move in here. It's just a little bit tricky, but it does, it counts better down as three waves down so far. So I can see that there's a little five here. So it just depends on how this moves up through here. The important numbers up here though are 13772, which will carry weight. It was support here and now it's resistance, but it's only early days at this number here. So in due course, this market vibrates and retests the 38 and so forth. It should stay within group 1, which is 10, 20, and 30 here, and this little area through here. So we can expect a sort of vibration across here, but this number here, the 37.72, will become important at that point there. The Australian market as well. Look, once again, on the daily, this is moving into the oversold territory here. We do have five waves up here of 1, 2, 3, 4, 5. So it can be a C wave, and we can have a top in, and it can move down from that point. The 61.8 retracement level would bring us down at 92.72 here. And the 92.72, the 272 number is quite critical in the bigger picture. So look, while the market is above this support here, the 272, then 92.72, then the market has got a bullish outcome. But that said, this market can have a top in here, and it can pull back to the 50, to the 61.8 place, in this area through here. So just need to be mindful of that. So in the short term here, the 93.50 is the line in the sand here. If that becomes a retested resistance, then that would be looking back at 93 and 92.72 there. On the upside here, if it does move up, then the 93.72 here is the place for the long trades to play out from that point there, because this can also be a wave fallback to this point here, but we'd want to see support on 93.72 for that to occur here. And this is where we can get, I mean, this has got overlapping wave structures here, so you've got to give it, I mean, it can be seen as an A wave, a B wave, and a C wave, or it can be seen as a 1, 2, 3, 4, 5, but it's got overlapping wave structures with wave 1 here. So, but, you know, derivatives tend to do that a bit, so we just need to be a little bit careful. So allow the market to open, allow it to find its feet. If the 93.50 becomes the retested resistance, then you know that we're going to be moving down. And on the other side, if the 93.72 as always finds support, then look to the upside there. The Euro Australian, we've been short in this and should be short from the 149 area. Now, in the bigger picture here on the daily, we're looking down here at wave 1, 2, 3, 4, and wave 5 should bring us into the 145, 144 area through here. However, the market will be oversold coming into the old lows over here. So there's going to be naturally support through here as well. So, you know, you might want to cover some of those longs at that point there and look for a re-entry there. I'll need to do some work on as I mentioned, the Euro wave count to the downside is a little bit tricky to count as it is here as well. So I'll need to do some work on that there, but definitely further to the downside. The pound yen and the euro yen, starting with the pound yen, you know, had a bit of a sort of tricky triangle pattern going across here. It doesn't read very well either way. So look, in the bigger picture, the 172 here is the line in the sand. Okay, so it as support or resistance really dictates the direction that you should be trading on, and we're looking to be short from these sort of high areas here anyway. But look, it's just important to acknowledge that, you know, this market has dropped through the 172 or the 72, I should call it, and it's likely to retest it as well. But at the end of the day, that 72 is support or resistance. You just need to be on that side of it. The Elliott count is for it to move down, and you know, we've been aware of that. But while it's above the 72, we had to be a little bit sort of careful about that. And here we can see from this particular high here, we had 5 waves down here, so we were looking for a retracement back, and then we're looking for another 5. Well, we've got the other 5, so we, in terms of 1, 2, 3, 4, 5. So this can be an A and a B and a C correction, and finished here and move up from here. It's likely to retest the 172, and it will likely do that if we break this down here while it's above 171.50. You can expect it to do that. If it moves under that, then we will be looking at it is resistance through here. So we can see from here we've got 1, 2, 3, 4, 5. So it'll do an A and a B and a C from here, but this can also be or from this low here, the A wave, the B wave, and the C wave completing here. But look, while it's above 171.40, say, these highs here, then it's got a reasonable opportunity to go back and retest that 172. So the resistance earlier in that piece is 65, 72, and 80 within this little area through here. You know, if I was going to go short this, I'd be looking for normally the 20, the pivot within group 1, the 2 as the retested resistance, but you could do that from the 30 in this case here, because it would create overlapping wave structures. Even the 40 as a retested resistance, you could glean small positions and continue that trend to the downside. But it's on the daily, it's oversold, you know, and it's likely to retest that 72 there. The euro yen is in the pretty much the same boat as well. We're expecting it to follow this particular triangle pattern, which is not really a nice looking triangle pattern here either, you know, but we were expecting it to come down for a C wave here. We can expect markets oversold on the daily because it's at old lows, previous old low. So You know, we can expect to bounce off the 140 area through here within the next session or two. And all of these now are really strong support and resistance levels here, the 140, the 141, the 142. So the idea is to play your game within those numbers there. So here's the 140 here. This is, you know, this the euro yen. The euro, a little bit tricky to work down through here. You know, I don't know. I mean, it looks like an A and a B and a C to me. I mean, I can count the 5 waves in here to complete this here. But look, either way, expect to bounce off here if the, you know, and you just got to work through that. You don't really want to trade against the trend too much, but the 140.30, if that finds support there, then you can go long from that point there. If the 20 becomes the support here, the 140.20, you could do it from that way there. If the 140 becomes the retested resistance, then this market will just continue lower, and then you need to stay low on that side. So look, the 140 is the line in the sand. The market's oversold on the daily, so you know, you can expect some type of rally or some sideways kind of pattern over the next session. But at the same time, if that 140 becomes the retested resistance, you'll be on the right side of that of the price, and also on the right side of the trend as well. Alrighty, cheers. Thank you.